former Prime Minister Abe led the depreciation of the yen, while the U.S. is raising interest rates to combat inflation. Japan has stuck to its zero interest rate policy. However, if the interest rate gap between the US and Japan widens, it will be difficult to block the yen's depreciation. Small and medium-sized enterprises with severe internal injuries due to the COVID-19 pandemic are on the brink of an additional increase in the cost of importing raw materials due to the low yens. The financial market, which predicted the end of Abenomics due to his death, was moved by a high yen and a fall in stock prices. The yen and the US bonds saw the financial markets experts interpreted the market-sensitive reaction to the death of former Prime Minister Abe as heralding a change in Japanese financial policy. At 11:30 a.m. on July 8, when the breaking news that former Japanese Prime Minister Shinzo Abe was assassinated and in critical conditions, the Tokyo financial market reacted immediately. The Nikkei 225 index, which had risen by more than 1.5% sharply, stopped its upward trend and ended trending in the strong trend. On the other hand, the yen moved from 136 yen per dollar to 135 and 30 cents per dollar. Abe's presence in the Japanese market is that great. Shortly after Abe took office in December 2012, he launched Abenomics, which is represented by large-scale financial easing and active fiscal expansion. Abenomics is an economic revitalization strategy that aims to help the Japanese economy escape from deflation by increasing exports, by inducing a low yen, by loosening the currency, and boosting the economy through fiscal expansion. Abenomics has revitalized the Japanese economy, which had been suffering from a 20-year-long recession. Subsequent prime ministers also inherited the financial policies of former Prime Minister Abe. However, the Japanese economy is currently suffering from the after effects of Abenomics' excessive reliance on financial easing and fiscal expansion policies weakened the economic fundamentals. Japan's national debt to GDP ratio is 256%, the highest among the G7 countries. At the end of March 2013, just before Haruhiko Kuroda took office as governor of the Bank of Japan, the Bank of Japan's government bonds holdings ratio exceeded 50% from 30% at the end of March 2013. The yen's value, which fell to the lowest level in 24 years, raised import prices, hurting small and medium-sized enterprises and the economy of the working class. Nevertheless, Governor Kuroda is repeating his view that the policy of large-scale monetary easing will be steadily continued. He is in the same position as former Prime Minister Abe, saying that large-scale monetary easing should be maintained without worrying about the national debt. There are many lawmakers, from the LDP's largest clique, Abe faction, who insist that large-scale financial easing should be continued even at the cost of budget deficit in order to escape deflation. On the other hand, Prime Minister Kishida is a sound fiscal faction that calls for reducing the government's fiscal deficit. If Prime Minister Kishida's influence grows stronger, there is a possibility that the governor of the Bank of Japan will be born to revise some of the monetary easing policy. When Japan's large-scale monetary easing policy, which has been in place for nearly 10 years, is revised, the yen's weakness is expected to stop and the stock market is expected to change.